Hello, this is Connie Belden. We're going to put to use what we did in the previous exercises and prepare a flexible budget performance report. So to save us time, I went ahead and copied down from our previous exercise the actual results. So if you go back here to exercise 3, I copied these actual numbers here from our actual results. I went ahead and copied in the flexible budget numbers that we also came up with. Those are the ones that we came up with here in exercise 2, but also used them down here in exercise 3. So I just recopied them here. And the planning budget that was actually given to us way back here in exercise 1 and 2. Here was the planning budget. So all the information I have in so far was given to us in the previous exercises. I just copied it in. Now we're going to take a look at the variances. The first variance we're going to look at is referred to as the revenue and spending variances. It will take the actual results minus the results from the flexible budget. Okay, so let's start with revenues. So the actual results for revenues are $34,500. Subtract the results from the flexible budget, which is $33,000. And you have a difference of $1,500. We'll come back to the favorable or unfavorable in a moment. Do the same thing for the others. 22,000 minus 21,750, difference of 250. Okay, and I'm just going to copy and paste. You would do the same thing throughout. Now, for the activity variance, you want to take the difference between the flexible budget minus the planning budget. So I will take 33,000 from the flexible budget minus the 30,000 from the planning budget. And that gives me a difference of $3,000. Okay, do the same thing here. Take the flexible budget minus the planning budget, and I get a difference of $1,250. Okay, I'm going to go ahead and copy and paste to do the same thing throughout. Okay, now let's start with revenues. Remember, a positive number is favorable. A negative number is unfavorable with revenues and operating income. That's positive, so that would be favorable. Positive, so that would be favorable. Okay, let's go over here. 3,000 positive, so that would be favorable. And 1,410 positive, that would be favorable. Now, let's analyze our expenses. If it's positive, remember, it's unfavorable. So those two are unfavorable. If it's negative, it is favorable. So I will make that favorable, favorable, favorable. If it's 0, there's no variance. Now, remember when you put this in connect, go ahead and make that a positive 10, a positive 320, and a positive 70. By marking it favorable, you're really signifying that it is a reduction. Okay, now let's go on here. Same thing. Positive number is unfavorable, so it looks like all of these would be unfavorable. 0, no variance. Unfavorable, unfavorable. And we have marked our variances. Thank you very much.